Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning, it's Thursday, 20 November, and as London gets going, three themes stand out. The dollar is firm, while the yen slides into fresh lows ahead of a delayed U.S. jobs report. Tech sentiment is buoyed by a blockbuster quarter from Nvidia, and Europe's energy politics return to the fore just as winter nears. Let's start with macro and policy. The big draw today is the resumption of U.S. data with the late September payrolls and jobless claims, where markets expect modest job gains and steady unemployment. Because November payrolls won't arrive before the December policy meeting, odds of a December rate cut have slipped, keeping the dollar supported. We'll also hear from several central bank voices later, including two Federal Reserve officials and the Bank of England's Swati Dhingra, while Europe's morning calendar is quiet, with only lower-tier releases. Meanwhile, the Japanese yen remains the underperformer. Dollar-yen has pushed to multi-month highs, and cross-yen pairs like sterling yen and euro yen are also advancing. That's despite a more hawkish tone from a Bank of Japan board member and louder warnings from Tokyo about sharp, one-sided moves. Rising Japanese government bond yields and questions around fiscal dynamics are adding to the pressure. Turning to markets and corporate news, Nvidia delivered a blowout quarter and upbeat guidance, pointing to very strong demand for AI chips through 2026. That lifted equity sentiment in Asia and supported risk-sensitive currencies overnight. In Europe, policy debate is heating up ahead of the UK budget, with opinion pieces sparking fresh talk around wealth taxes, though investors are focused more on growth and spending signals than slogans. On geopolitics and commodities, Europe's energy framework is back in the headlines. Slovakia's prime minister is weighing legal action over the EU's planned Russian gas phase-out, while analysis warns that how capacity markets are designed could make or break efforts to avert a homegrown power crunch. Separately, lawmakers are set to grill the European Commission over tariff tweaks in the EU-Morocco Pact, a reminder of the political sensitivities around trade and labeling. And up north, the race for the Arctic's critical minerals is intensifying as countries look to diversify away from China's grip on inputs like rare earths, a longer-term thread for the metals complex. In currencies and commodities, the tone remains dollar-positive. Euro-dollar continues to slip toward recent lows ahead of the U.S. jobs print, while sterling dollar has stabilized after a 4-day dip. Dollar Swiss is firmer, and the yen's weakness is most pronounced on the crosses, with sterling yen at new cycle highs and Aussie yen near yearly peaks. Gold is treading water, capped by the stronger dollar as traders wait for the data. Looking ahead, it's a light European morning. Then the U.S. payrolls and claims take center stage. Fed speakers could fine-tune the policy narrative into the close, and any fresh headlines out of Europe on energy policy or trade could add color. What I'll be watching today: dollar-yen for signs of an ongoing uptrend, but with an ear out for intervention rhetoric. Euro-dollar for a downside bias if payrolls firm up the dollar story. Sterling-yen to see if momentum persists into the London session. And Aussie-yen, where supportive risk tone and steady China policy keep the uptrend intact. I'm also watching gold to remain range-bound unless the jobs data materially shifts the rate outlook. The takeaway: markets are leaning risk on, thanks to tech. But the dollar's resilience and a fragile yen underline that policy timing still drives the agenda. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.